Hello, everyone. This is Jabon Foster, the founder of J&D Trading Group. Today's training is going to be focused on Fibonacci's, right? Fibonacci retracement, to be exact. What is Fibonacci retracement? Fibonacci retracement is a method of technical analysis for determining support and resistance in the levels in the market. And in other words, it spots key reversal points, right, in the market. Over here, I have some key reversal points. You guys can screenshot this. We have the 38%, or it could be 0.382, 50%, 0.5, 61.8%, which is 0.618, and 78.6%, which is 0.786. And the two that I frequently use, guys, is the 50% and the 61.8%, right? So we're gonna talk about that. Also, we have the target areas. When we're talking about, I could add that target areas. Like I said, target areas would have the I would say the 0% area. Right, and then we're gonna have that's target one. Let's make that TP1, and then we can have the negative 27%, right, and then which would be like TP2, and then we have the negative 61.8%, right, and that would be a target target 3, right. So those are also target areas. We're going to review those a little bit later. You guys can screenshot this. I want to make this training simple as possible, right? And it may not all make sense 100% after this training, but that's the reason for live analysis, guys. You guys are able to get on the live analysis trading calls, watch how I trade. And I talk through how I trade. I'm telling you why I'm taking the trades, the reasons why, full breakdown analysis, so you can see in real time, and you could be properly educated, right? So please take advantage of the live sessions. So simplicity is what I try to make these trainings to be. I know sometimes I probably even like over explain, but I want you to make sure you guys fully understand. Why is this like this? 1 second, guys. Simplicity, right? So let's get to it. So I just drew up some examples of how you use Fibonacci's, the Fibonacci retracement tool. Before I actually show you how to use this, guys, this is the Fibonacci retracement tool here. You could find it on TradingView the third section down. When you click that drop down arrow, you guys see that I favored it, right? But you could see trade based fib extension. The one that I use is Fibonacci retracement. This is one that we're going to go over today, and there's other different things, pitchfork and all that other stuff. I'm not going to give trainings on those because I don't use them, even though I know them. But I'm just going to use Fibonacci, do a training just on this, okay? Teach you guys the way I trade, right? And I don't want to confuse anybody else with other stuff that I don't even use. Okay, let's get to it. So with a Fibonacci retracement, right? If we're looking for the sell, this is the sell example, okay? If we're looking for a sell, we use a Fibonacci from the very high and bring it down to the very low, right? And after we do that, we look to see what price may retest, right? Now, the key areas that I said that price can retest is the 61% and the 50% area, right? So once the price comes around these areas, we start to look for a reversal for price to continue going down. So once again, how do you draw up these Fibonacci's? And I'm going to show you real life examples. So say current price is right here. This is current price. And at live time. So what I'll do, not current price. Current price is here. Current price is here. but this was the previous swing high. So as in previous training, the market goes like this, right? So this was the previous swing high, and this is current price, right? So I'll put C there for current at that area. Okay. So what we do, sorry guys if you hear a little noise in the background, that's my son. So what we do, so how you draw it up, you draw from this point A, right, the swing high to the swing low, right? So basically from the swing high to where price go to lowest before it start reversing. So once again, I would just simply, if I just delete this and I grab my Fibonacci tool, all I do is just click from that swing high, drag it all the way down to the swing low, right? And then I just stretch it across, right? So I can have a better view. And I go from wick to wick. So once again, I'm gonna show you guys this on the line charts so you guys can see it. Right, okay. Now, once I do that, I'm looking for price to retest, say this area, this box is my structure, right? So I'm looking to price to retest or pull back to, you know, either this area, these three areas, guys, 38, the 618, the 50. These three areas, guys, those are the key areas that I look for price to hit and reverse and for me to get a sell. Now, as I mentioned, the target one, the 0%, right? That would be a TP1. Let me just actually write that in. So this would be your TP1, all right? The negative 27, this would be a TP2. Okay. And in your negatives, sequence, that would be a TP3. Right. That's these are levels that I use to trade and make my TP. Now, also, I wasn't going to talk too much about this 161.8. What that basically is a price break above this area. So if price decides to continue, right, instead of reversing down, price decide to continue going up and up. If price comes and break over this area, breaking this high, then my next target area will be here. So this will be my TP, right? Let me explain that a little bit later. Okay. So this is for the sell example. So once again, this one is for the buy example. All right. So we price this was the previous swing low. This what price was currently at. So I brought it from the low to the high. And once price retest that structure, retesting the 618, remember either one of these three areas, right? I'm looking for price to pull back to, right? I love when the 618 lines up with the structure. And then that, that usually whenever we get that happen, that's considered confluence, right? And whenever we get that give you a beautiful opportunity to go the direction that you're expecting. Now, I know we have other key reversal points. So I just talked about the 38, the 50, and the 6-1, saying these are the key areas, right? When we look at structure and looking for confluence in the market so we can build our confidence in taking the trade. There's other levels like the 78%, 78.6, and the 38 and the 50. Those, right? The 78, I usually look at it when we're looking at Fibonacci extension. Now, the 718 is also a key reversal area, even with structure, but I mainly look at it when we're looking at harmonic patterns. Okay, I don't trade harmonic patterns, but I know what harmonic patterns are. I understand them, and it's good to be able to spot these patterns because harmonic patterns, guys, are reversal patterns, right? Harmonic patterns are reversal patterns, right? So so when price D, when price complete this pattern, which is D, it goes from X, A, B, C, and D, right? When it completes the pattern, right, we expect price to then start going this direction, right? And if it's for sell, vice versa, same thing. But it's a reversal pattern, right? So now when the harmonic patterns form, what happened is that price would go straight up, but instead of coming down to the 618, it would tend to retest sell to the 38. And this is where I said that you can still, I trade whenever I get price retesting those 38, right? Pricing, go back to that high, good amount of pips or so forth. And sometimes it doesn't even do the harmonic pattern, guys. It just continue going straight up, right? So it all depends on the structure once again. But if it does form a harmonic pattern, when price is pulling down, it tends to either prices for the harmonic patterns could go to the 618. If that aligns with the structure, that would be great. And it also comes to the 718, right? So these are key areas for harmonic pattern, and we can look for a trade. If I see one on the chart today, I'll show you guys that. Once again, I don't really trade it, but it's good to spot it. Also, the 23 and the 38, once again, this is just a different pattern. This is called a cup and handle pattern, right? Just write that, cup and handle pattern, right? Once again, I don't trade this, but it's good to be able to know these patterns, such as flag patterns, triangles, and stuff. It's good to know those patterns because when you spot them in the market, you know what to look for, right? But this is a cup and handle pattern, and couple handle pattern is when you have equal highs. So price was here, came all the way down, and came back up, giving that equal high area. But when it retests, it's going to retest, right? It might give you a little flag pattern like this, flag pattern like this, right? With a 5-wave sequence. And what happened is that it could hit the 23% and then spike up, or it could come down to the 38 and spike up and never go past the 38. So that's another example of how when you can use the 38 as a reversal. Also, you could look for the entry over here, or you could look for when it break out the flag and then you take it up. Okay. If we spot this on the market, there's other problem patterns where the 38 is also coming in handy. If we spot this on the market, I'll also show you. Another thing, I forgot to talk about harmonics, right? So the thing with harmonic patterns, right? The targets, right? The target is usually if price goes to the 718, target 1 is usually that 618 area, right? From high to low. Target 2 is going to be where B is at, so wherever B is at, right, which would be that 38%. So that's target 1, target 1, TP1, right? TP2, right? That's bad drawing. Let's see, 2, there it goes. And then C would be a target 3, TP3. Now, you can have an Elliott wave pattern and you have a harmonic pattern. And because you know it's a wave pattern, you're going to complete the wave sequence of 5 waves or 3 waves, whatever the case may be, you can actually trade it past C if you know what you're doing, right? I'm not going to get into that, but I just want to point that out. So let's look at the charts. Let's see if we could find anything. Right, we have structure here. So I know I talked about this already because this is your GBP pair. I tend to do training videos on this pair. So when we talking about drawing a supply and demand, right? We went over that in previous training. And then we have price I talk about different type of retest. So we have price do a V-shaped retest, came in, retest the structure, and it went up, right? This is how you can apply Fibonacci on it. So you take your Fibonacci tool, you're going to go from the very low point at that wick, right? And you're going to go, so let me just circle it before I even do that. So you're going to go from this very low point, that wick right there, to this very high point. So remember, the market goes like this, right? So we're going from the swing low to the swing high, right? And then we're going to see where price retest at, and then we expect to catch an entry over here to take price up. Sorry about that, guys. Okay, so let's look at that for example. So once again, we're looking from the very high, the swing low, sorry. And this is for the buy example. So for the buy, we start from the bottom to up to the top, right? Go to that very high. So I'll go right here and I just stretch it across like that. Now, I want you guys to see something, you can make it more a little accurate. I want you guys to see something, right? Look what happened. Price, went up, right? At that high. And then price did what? It came to that 618 area. Look at that, right? And it touched the structure, as you can see, wicked it. So based off that, we're able to now determine how to enter that market. So I talk about candlesticks, how to enter, break, and retest. So look what we have after we had an engulfing candle right over here. And that could have been your entry. That could have been your reason to take this trade. You could have entered for a buy. You go, oh, that's a short, sorry. We're talking about long tools before, long for buy, short for sell. So you could have entered there. Stop loss could have been at that wick. You could have put it, in a little bit under that structure. However, whatever you're comfortable with, or whatever your training style is, or whatever uh, how accurate you are about that candle, that trade. But you could honestly put it below that wick. That's 11 pips. Once again, your target one is going to be 100%, right? Which is here. You see that target one hit 30 pips. Target two going to be the -27. Target three going to be the -618. So as we can see, price, hit target one. It came back to entry. But once again, price end up doing what it was supposed to do and hit your target of 60. This is 69 pips, right? So that's how you can use the Fibonacci, guys. It just confluence, right? Price came to the structure, but you wanted a confluence of when to enter. So it's the same thing over here, right? So we look at structure. The first thing we do, guys, we draw up our structure, right? So we draw up our structure like this. Now, what you do is you look from your swing low to your swing high, right? So your swing, obviously you have up and down within here, right? But we're talking about to the very low to the very high, right? Very low to the very high. Now, okay, so this is an example, right? If I were to look at price like this, I like this, sorry. If I were to look at price like this, right? Say like this, opposite direction. And so I'm expecting price to sell, right? From the low to the high, right? And I'm from that high, sorry, to that low. And say I'm expecting price to sell. So I'm expecting price to go down, right? As we can see, price, it went past that 618, right? It didn't hit it and come down. It actually went up. And then when price break above that 100%, once again, you see that break. As we can see, price went to the next target, which is this negative one. So not negative, this 161%, right? That will be a next area. And as you can see, price hit that area, right? And then it was just sitting there, and then it came back down as a retest to continue going up. Okay. Just a little gem on that. Not go too deep in that one, but just thought I'd point that out. Also, so once again, we have our structure. So we're going to see what's the fib levels there. So from the very low to the very high, bring that across, right? Look how price came right down, guys, and hit that 618 right here. That black line, this is a 618, right? Hit that area right there, lined up. And we're able to get, look for an entry over there. This is on the hour time frame, so on the smaller time frame, and we're going to took this trade up. Now look at that. Target one got hit. Target two hit, target three hit, right? That's how simple. After they hit your target three, you see that it just sit around here a little bit, then start reversing again. All right, look at that. Beautiful. Let's see if we can find some other example. Okay. See if we could find an example. Oh, I had something over here. Okay, look at this. Once again, guys, we have this from the very low to the very high, right? And as we can see, instead of price, this is a 618, right? The black line, instead of price coming to that level, it actually retested the 50%, right? And then went up and hit that target one. So that was a beautiful example as well, from low to high, using Fibonacci and hit that target one, right? So whenever price is breaking and retesting, you can use a Fibonacci to get entries. The Fibonacci is not giving you entries per se. It's help, it's confluence, right? So you need, and when you're trading, it's good to have 3 or 5 reasons for why you're taking a trade, right? Solid reasons. So, and what could be the reason or the direction of the trend, right? It's the uptrend, downtrend, the structure, right? Like is price breaking a retest of major support and resistance of supply and demand area. So those things, right? You got to factor in, and it helped give you confluence, right, of when to enter. Now the 618, why did I give you confluence and confidence is that the 618 is a key reversal area, the 50 or the 618. So whenever price hit those levels, we can always expect that it's going to reverse from there. And I just showed a couple of examples. So that's why it adds on to your confidence, right? Of I'm more confident to take that trade because it's on an uptrend and plus a retest to 618 and hit the structure at the same time, right? So if we look at anything in the market, guys, like look at something like this, right? The price came all the way down here and it retest here, and we can see that it came down. So let's see where it lines up to, right? Now we could draw a structure, right? If we could draw a structure, we could look at structure like right over here. You can see our price is playing around that area. Look at that, right? It's a key reversal point when price hit it. So go from the very high to the very low, very, very low right there, which is right here where my mouse is at. Stretch that across. As you can see, look what happened. Price came all the way down, right? It came here and retest that 618. And the 618 guys lined up with what structure, as you guys can see. And then we was able to look for an entry over here because that gave us like more confirmation for why price might look to reverse. And as you can see, price went down and hit that target one. Solid trade. That gave you, about 50 pips, right? So that was a solid trade. Okay. We talk about if you look at profit maximization training, we talk about that, about moving stop loss to entry and profit and stuff to make sure you secure your account when price reverse on you, right? So I'm not going to talk about that. You guys should know that from the previous trainings, but this Fibonacci would definitely, if you haven't watched the supply, if you haven't watched the profit maximization training, please watch that. Okay. And you can keep doing this with, as many. Let me see if I could spot a harmonic for you guys. I like to spot a harmonic pattern. This is like a little harmonic right here. This is a harmonic pattern right here, guys. So look at this, right? So this is a harmonic from this high, low situation here, right? I wouldn't say it's a full harmonic. I would have to look at the ratio for the pattern because it's different type of pattern, bat, cipher, and all this stuff. So, but just to see if this is lined up anyways, let's see. All right, so let's see if this pullback lined up to the 38 or the 50. It can't be past the 50, right? But from this high to this very low, right? Look at that, price hit that 50. It hit the 618, but it hit the 50, right? And came down here. And then price in this example actually gave us an equal high situation, right? So this may have not actually met the ratio. Probably did, but see if I can find someone cleaner. I don't really trade harmonics, right? But it's good to know them, right? So you can be able to spot them. But wherever you break in a retest, right? If we look at from this very swing low to this very swing high, press break retest. So if we apply the fibs from this very swing low to this very swing high, right, all the way to those wicks at the top right there, right? You can see, look what happened. Price came to that black line, that 618, and the 50, mainly the 50, right? It just wicked to 618 and then took off, right? Key reversal points. Plus, what happened is that you're lining it up with the actual structure, which is right here, right? You're not just going in there. You're not just taking the trade because it's at the 618. You're lining up with the structure right here. Okay. So that was a beautiful confirmation. Let's look at this from this high to this low. Let's look at this pullback. All right. So how would I line this up? The first thing what I'm doing is I'm going to line up my structure. So I'm looking at this right here. I'm looking at structure. If I see the pass, maybe, there's an area over here somewhere, but there's some areas over here to why I pull back, but let's see. All right. I would expect to pull back a little deeper, but let's see. It's very low, the wick, the very high up here. All right. It's very high right here, this wick, and then I'm just going to drag it across. All right. In this situation, as you guys can see, price pulled back. It didn't come to the structure. It pulled to the 618 or the structure. It came to the 50, right, which is a reversal point, and then price literally took off to that TP1 area. Okay. Actually, it went very close to that target too as well, but yeah. So once again, guys, this right here is even something like this, right? You draw your structure, look at that. And then you're looking from the high to low, right? And then as you can see, 618, that black number line with it, and then give you an engulfing candle and price drop. And look, it hit your target 1 and it hit 1, 2, and 3. Guys, that would have been your entry there. Look at that, you made 61 pips, a lot of profit, clean, right? So that is how you use Fibonacci retracement, guys. If you guys do have any questions, please take notes from this training, write down questions, and we can schedule a one-to-one session, mentorship session, and I could go a little bit more in depth with Fibonacci retracement and how to use them on the charts, right? So you can use them correctly and make profit. Also, you can use Fib on the entire, you don't have to just use it there. You can use on the entire high, this entire low, right? And look what happened from this entire high to this entire low, price pulled back around that 618. And then look what happened. Price is literally dropped to that target 1. And because it dropped it there, we can expect price to then continue to target 2, target 3, right? And if you understand how to use this would have been an easy, currently over 166 pips. So using Fibonacci's really help you in the market. And if we're talking about structure, we're going to line it up with this structure, right? And we see that price came a little bit above, but once price came under here, something like this, you go to trade it down, right? Okay. So once again, thank you guys. You want to take a screenshot? Take a screenshot. Thank you guys for watching this video. If you guys have any questions, please take notes and come to me with questions, and we can schedule a one-to-one session to make sure you're properly educated, right? The goal is to make sure you become financially independent. Thank you for your time. Have a wonderful day.